with your cursor, and you'll see the mic all the way to your left.
Yeah.
There he is.
Got you.
Yeah. I don't know what happened, but anyway, great to talk to you, Dale.
You too, Hal.
It's a time of turmoil, and I was trying to think in just a few minutes what really we have to pay attention to. Number one, we have now in play a slowdown in global industrial production and trade. And we're going to see trade growth near zero. And I think that it's a result of China at the lead.
Lockdowns.
It's not just the lockdowns. The domestic consumption is collapsing, not just because of lockdowns.
That's the excuse.
And then the exports, the only way you can keep that economy going is industrial exports, particularly industrial machinery, selling railroads, earth-moving equipment, and so forth. But
like
the demand for that is now near zero. I mean, there's no new orders developing for China. So their export potential is going to be really grim. Same, by the way, will apply for Japan and South Korea, that are both big exporters of similar products. They're facing the same thing, no new orders. So you get a globally.
Where would most of the new orders go to? China is what you're saying, right?
Well, it goes to China, but also to emerging markets.
Emerging markets, okay.
Yeah. So, point one, just like the second half of 2019, global industrial slowdown synchronized. Now, at the same time, we've got slowdown in European growth, because they will also be suffering a weakness in the export side, plus a lot of the internal problems.
Hal, can I make a comment? We've recently had a little bounce in the euro, and the dollar's been on a tear. So, if Europe can't export with a 103.5 euro, it's going to be difficult if the euro starts trading 110, 115, 120. That's going to be another headwind for them, isn't it?
Yeah, I don't think it can happen. I don't think the euro strengthens. Now,
okay.
Let me jump to something not well understood. About 3 weeks ago, the Treasury, Mrs. Yellen, began calling around to really big equity buyers. And, you start with who's the biggest. Maybe you'd pick Norge, the Norwegian Sovereign Wealth Fund. She called directly, not in the news. I'm telling you what's been going on that I get from my own network. Right. The CEO of Norge, she talked directly, not about Fed issues, but about markets, with the head of the Swiss National Bank. She called around other sovereign wealth funds.
They looking for a bond buyer on the QT, on the balance
what
runoff?
They're looking for, what she's said that she's looking for, is a much stronger dollar. And that even higher than 103, 104, 105, much stronger. It's a policy. Now, you can argue about that all day as to what the purpose of it is, but I'm sure part of it is punishment of China and others. But underlying was also the argument, the stock markets will go down over the year, and we need to have a floor. So we're going to rely on you big guys to provide the floor. Now, if you think about it, the Fed is increasingly relying heavily on big outfits like BlackRock. And now we're getting the Treasury on its side, trying to get in play the really big players on putting in position a bottom when the market goes down. 10 or 20 years ago,
I thought they had a plunge protection team, Harold.
That's right. But on a global scale, with global players, this is something new. It's a highly concentrated, really big in terms of the impact. And that's in the background. So whatever everybody's thinking about currencies, you got to think in the background, there's a big game being played. And I'm sure it's tangled up with the US political timetable also. Now,
they don't want they want a market rally into the fall, don't they?
Yeah, of course. Yeah, of course. Yeah. But the circumstances.
Could they get crude under 100? That would do it. Could they? They have any tools left?
I think the Biden administration ability to do anything about energy is so confused that they're simply unable to come up with a plan because of internal conflicts between tree huggers and people concerned about the economy. So it's kind of a vacuum on that side.
It's a vacuum in almost all policy areas.
Yes,
Harold. Doesn't it feel that way to you?
Yes, totally.
So what a unfortunate time to have a vacuum at the top of our country with everything that's going on. And, I do want to bring you back to before the war, you did say that there would be an invasion. There are some people thinking there wasn't going to be one. So you called that. And then you also talked about that, Putin might retaliate. There were a couple of underwater cables that may have been cut by his subs. And I'm kind of surprised, and I think most people are, is that we haven't felt, besides shortages of everything, which is going to impact everything. He hasn't retaliated in any way, cyber, or maybe we've just been successful in blocking attacks. Do you still expect something from Putin? And do you think that he's going to lose this war?
I'm following that war really closely. I talked to a lot of people, including, and I do have a network into Russia. So what I feel is that, number one, Putin's totally surprised about the failure of his military, because he really did expect all of this to be over in a number of days.
So did our U.S. intelligence. Where was the failure? Biden was saying 3 days Kiev would fall. Right?
Yeah, but we estimated the Russian military to be as strong as Putin believed it to be, and it turned out we were both wrong.
Yes.
Because it's a special military exercise, as Putin calls it, under Russian law, the conscripts, if they walk away, there's no real penalty. And if they declared war, then somebody who wouldn't shoot could be shot. But what's happening is a lot of the younger conscripts are simply walking away. They're deserting, and there's no penalty. So that hasn't been much noted in the press, but when you leave the machines lined up on rail tracks and just walk away, it makes it easier and easier for the Ukrainians to blow up the hardware.
Is he going to get desperate enough, since he hasn't been able to be successful conventionally on the battlefield, that he's going to escalate with chemical or tactical nukes?
Depends on how far the Biden people and some of the other Europeans go to try to humiliate him.
Well, how about Finland and Sweden joining, wanting to join the NATO?
Well, all of that is strengthening.
Right.
But it's not NATO, by the way. It's Northern Europe unifying. If you ask people in Portugal, they have no idea, no interest in this. But if Putin comes to the point where he's being humiliated, he will pull out tactical nuclear weapons. And where he'll put them is on those supplies coming into the Ukraine, and in the process may hit some Americans and some Brits. So it could escalate quickly. As it's going now, he's running out of the ability to keep going, but he's prepared to keep going for months because he has a different target. Everybody's thinking about Eastern Ukraine, but he really, really wants to seal off the Black Sea and make a corridor west to the area around this Transnistria location just below Romania. It's been in his mind all along that he wants to build out Russian territory. So it's not only about Ukraine. Right now, he can't do much more.
Is that Moldavia too, where he's been?
Moldavia. Yeah, Moldavia is a target. This is not over. The question is, can this stabilize without him being humiliated? The way that the Biden people are talking, it sounds like they want to push him to that point. And there's where I agree with Henry Kissinger just the other day, saying there comes a point at which you want to stabilize the situation without humiliating the leader. So this is not over.
Okay,
now,
that's not over. Let's talk about something that was kind of shocking to the Biden administration, not to Joe, that we would respond, the U.S. would respond militarily on any invasion of Taiwan by China.
Well, I think that's the consensus in the administration. It's just the consensus was also don't say it out loud.
Right.
So
that's what I mean. Yeah.
So Biden spoke it, but I don't think it changes anything. China is not in a position right now to go to war with Taiwan. China's economy is really in dire straits, and a lot of unrest is developing internally. It's just before the October plenary session of the party. It would be bad for Xi Jinping. I mean, his hopes to be permanent leader, emperor forever, would be ruined if he got in the middle of a battle at sea. So I think the misspoken words of Biden won't matter. In a few days, everybody will have forgotten about it.
Okay. So I know I took you off. You were really on a financial track when I just brought you back to the war, because I was, since they invaded, I was interested in, what you thought the end game might be. And it doesn't sound like
there is no end game right now. And nobody's talking to anybody. There is no dialogue. The one person to watch, actually, the only trusted go-between is the Prime Minister of Israel. he's the one that Putin and Zelensky talk to all the time, several times a week. Somehow in the background, if there's going to be movement, watch him.
Okay. So, we have this food shortage situation, which was already going on before, Ukrainian wheat. The only one getting it are Russians, taking it by truck back to Russia. And then India, most countries banning exports of things that are in short supply. Many uprisings, like, the Arab Spring was over food prices, and you're talking about China. They're prepared. I mean, they're a big stockpiler of wheat. I don't know how you could be prepared for a global famine in such a large country. But do you see this food security issue? Which regions of the country, besides, us Americans, will complain about the higher prices, but at this point we could still get stuff, just pay through the nose to get it. What about there just not being enough in other countries? Um, could this be what destabilized China and finally, things get away?
It's going to be a severe problem in China, but it's going to be a severe problem across the Mediterranean, all the Mediterranean, Northern Africa, places like Egypt. The problem is actually global, because when you get to the main cereals, it's like soybeans, grain,
wheat and corn,
you got, the big players are not just U.S. and Europe, but Brazil. But the slack in the system is not great this year, and if we look out ahead, this problem can last 2 or 3 years at least. So it's going to cause upheaval in many of the smaller countries. For the American consumer, if food is more expensive elsewhere, a lot of it's going to get exported. So our prices will go up, even though we have supplies.
Yeah, that's what's happening with natural gas, because we're exporting now.
Same.
Yeah.
So,
is there anything to be happy about? Took you too long, Dale.
Yeah. If we look ahead, let's get past right now all this turmoil plus entangled supply chains, slowly becoming unentangled, kind of split between China-related supply chains and the rest of the world. All of this will take 2 or 3 years to sort out. But then what I see coming is a much lower level of long-range transportation and a big shift towards shorter supply chains, more local production, especially in manufacturing. A lot of new technology surging forward. We're going to come to what I call industry 4.0. It's coming quietly but very fast now, and a lot of
also, Harold, I believe you said in one of our interviews, people are worried about the scarcity of rare minerals and semiconductors and things that are geographically exclusive to certain areas, like Russia, palladium and so forth, that you talked about synthetics being made to serve the same purpose. That would sure change things about people fighting over natural resources, wouldn't it?
Yeah, I think we're going to see a revolution here, because new materials every day, major advances being made. And then also where we make things. 6 months ago, we were talking about semiconductor, shortage in the U.S. Then we had the announcement of the Taiwan, manufacturer, and Samsung said, well, we'll build them in the U.S. And now we've got other plants, Intel. And by the way, where these plants are going are not where you would think. They're going in Arizona and Texas.
Yeah.
And everybody said, oh, that's impossible. Those plants need a lot of water. But what the company is doing is they're piping the water from hundreds of miles away. They've already built in the idea, we don't need the water, but go get the water, bring it. We're going to have a revolution there. And the materials for making the semiconductors, new ideas are coming out of MIT really fast now. I'm not worried about that. What I'm saying is the supply chains for a lot of things are going to be shorter. We're not going to have to dig up earth the other side of the world and ship it all the way to the U.S. And there'll be a lot less shipping of high value products like automobiles. The Germans will do less autos in Europe for sure, but they'll do more autos in Alabama to the extent that they need. So we're going to see reconfiguration of where things are being made. I'm very bullish about southern U.S., very pessimistic about northern U.S. because just everybody's going away from high taxes and policies that are...
People are moving to states that line up with their political views now.
No doubt about it.
So are you pessimistic about California?
Very.
Very?
Very.
Okay. All right. Me too. Anyway, Harald, that's interesting to, so we have to get through a couple of years of rough seas and developing these new supply chains, and instead of just in time inventory where we went out of time.
Now it's just in case.
Okay. And Geo, you think this thing is, is this, I know that Pippa thinks this is, we're in World War III. I mean, just because we say we're not at war with Russia, Russia does believe they're at war with us, right?
Yes, no question. But the way, the form that warfare takes may be different than anything we've seen before. Lots of small wars in faraway places. That will multiply. The Russians themselves are all over Africa militarily. But we're going to see more troubles coming out of space. There are lots of new technologies being developed, especially by the Russians and the Chinese and us, to harness energy from the sun, not near Earth, but out there, and then somehow channel that energy to Earth. And that's moving right along, hardly even thinking about it. But that has two outcomes. One is, great, we get some more energy on Earth from a logical source, but didn't know how to do it before. But the second is you can make weapons out of what's called directed energy. So that's
start taking out satellites and so forth too.
And even directed energy to locations on Earth and taking out locations.
Okay, all right.
That's coming. Within 10 years, that's going to be very real.
Okay, and so I know you're not a financial advisor, but for yourself, you think this is a good time just to play it safe and not be aggressive and preserve capital?
Let me boil down my view. Everybody keeps asking what is the dollar? What's the dollar future? And I keep saying that dollar used to be a gold-based currency. I was there when we dropped the gold.
Right.
What is the dollar now? It is a collateral-based currency. Everything is based off borrowing against high-quality dollar-denominated collateral. That makes the treasuries, the amount of treasuries in existence, the key to the dollar. But one difference between borrowing against dollar-based assets in the U.S. and then the euro-dollar market is that the leverage in the euro-dollar market is unregulated and much higher. So if the Fed actually succeeds in reducing the total flow, the balance sheet, what we're going to see is what I call the collateral multiplier at work, shrinking credit worldwide much faster than we would have thought. Because for every 100 billion reduction in the available collateral, we're going to see several 100 billion shrinkage in credit around the world.
Okay.
Very few people are thinking about that. So,
yeah.
But that also means to me the Fed will have to stop hiking and will have to slow its ambition to shrink the balance sheet because it will begin to show, we'll begin to see solvency problems appearing.
I was just going to say that. A lot of people talking about that for the fourth quarter of this year, solvency issues. Yeah.
Final point, U.S. economic growth is going to be near zero this year. I don't know why anybody thinks there's a recovery underway. The employment data are so misleading because the participation rate has been falling. The only thing that I know is that the majority of new jobs created in the U.S. are by small business. So if we look at the household survey, which tells you about small business, each month we're getting a shrinkage of jobs at around 300,000 a month. So it looks like we're building jobs, but that's all statistical mumbo jumbo. Employment, the non-farm payroll that we look to is misleading. You need to look at the household survey, and it tells us jobs are shrinking.
Okay,
and
that's
I think
a great point.
We are slowing down, and everybody's forgetting what that means.
It means we're already in a recession.
We are in a recession. It began last quarter of last year. It will get deeper slowly. It will be painful, especially because although there have been wage increases, the inflation rate is faster than the wage increases. So households, gasoline, heat, electricity, just money to spend on odds and ends. So demand for consumer durables is going to dive. Automobiles have been inflated for so long, it's going to dive. We're already seeing used cars, the price starting to fall. It's going to fall a long way. This is going to be a very unpleasant year. Bad for Biden, of course, because not going to get recovery before the election. Anyway, that's my thought.
I tell you what, I appreciate it. We should be paying attention to the household survey. Maybe if the Fed does want to take their foot off the brake, they could point towards that and say that employment is starting to, they're calling it red hot. Maybe it'll be.
But at some point they'll have to recognize it's not red hot.
Yeah. So great talking to you again, Hal. I recommend that people go to your website and check it out at Malmgren, Malmgren-si.org or follow you on Twitter.
Yeah, Malmgren Strategic Institute. Yeah.
Yeah,
well, I'm on
Twitter.
I'm on Twitter fairly often.
And that's at Hale's Rethink. That's your Twitter. Right. That's your Twitter handle.
And you know, I'm not taking sides. I'm not taking sides politically. I've worked with both parties. I don't have a personal agenda in politics. But I try to point out there's things that we're not thinking about that are happening and before they blow up. So I don't try to stock pick. I try to look at fundamentals at work that are being overlooked. So that's just the way I go at this.
You know what? Here's a word for you. You're a watchman. You're in the tower, right? You're a watchman, and you're hooked up with people of influence, and you know, you're giving them the skinny, Hal. And
that's where I am. That's where I've been for quite a few years now.
Yeah, and we all need watchmen to be in front of the gates and let us know what's going on, because we're all caught up in our lives in the city. So you are the official watchman of F.A.C.E, Hal. And I appreciate your time every appearance and every interview.
Well, great to talk to you. Doing a great job with this system you built with really good people. And I look forward to hearing from Tracy tomorrow, because she's really, in my view, the most outstanding commodities guru in the world.
What a great endorsement for Shy Girl. So thank you so much, Harold, and be well. And I look forward to our next conversation in a few months.
Good.
All right, everyone, that's Hal, and follow him at Hal's Rethink on Twitter. He's active on Twitter. I see it a lot, and it's edifying. So that's good luck the rest of the turnaround Tuesday, everyone. And you could join the team in 9 minutes for the morning edge. Don't forget, don't just count your problems, count your blessings. And if you find something to be grateful for, you won't be depressed. You can't do them simultaneously. And I'll talk to you, everyone, tomorrow. Adios.
Adios.
Adios, Hal.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.